there is no instance where I've seen currencies begin to outperform a precious metal or a real asset. And I don't see how that could change unless a country was able to go on the gold standard, which is impossible, so a modified gold standard. And even that would have challenges because who can afford to back their currencies with a hard asset that's would take billions upon billions of dollars, but not fiat dollars, but billions and billions. It's difficult, if at all possible, to do. And until that happens, gold will also always be the premium method of storing wealth or a safe haven asset.
Wall Street keeps pushing up its already bullish calls on gold as the precious metal climbs to new highs. Current fiat currencies have lost an astonishing 99% of their purchasing power against gold since 1953, a fact rarely acknowledged in mainstream economic discussions. A true monetary reset would likely be triggered by gold price increases of $500 to $1,000 per day, finally forcing policymakers to recognize the systemic failure of unbacked currencies. Technical market analyst Gary Wagner points out that while paper money remains widely accepted for transactions, its purchasing power declines each year. Wagner emphasizes that no fiat currency has ever outperformed gold in the long run, as their intrinsic value remains stable. The current economic policies of the Federal Reserve and other central banks are likely to significantly influence the future trajectory of the U.S. dollar. As of March 2025, the U.S. dollar has gradually weakened since 2020, with this depreciation accelerating as inflation has picked up. This trend is influenced by several factors, including the Federal Reserve's interest rate policies and the broader economic conditions. Based on fundamentals, Wagner argues that returning to a full gold standard is nearly impossible due to the immense financial backing required, reinforcing gold's role as the ultimate safe haven asset. More recently, the Heritage Foundation included a whole chapter on the Federal Reserve in its Project 2025 and mentioned the option of eliminating the Federal Reserve to make way for a return to the gold standard. As far as the market is concerned, Gary Wagner observes that investors are shifting to safe haven assets with global equities under pressure. He points out that gold's true strength lies in its stability, maintaining relatively consistent purchasing power over decades and even centuries. The breakout in the gold-Dow ratio further confirms a shift in market sentiment toward gold over equities. This trend, supported by fundamental and technical signals, suggests that gold will likely outperform as economic uncertainty grows. Now we present the clips of Gary Wagner's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Any investor that has a respectable portfolio that's really important to them, whether it's retirement, whether they're at a point where they're living off of that income, is very sensitive to risks as well as potential rewards. And so U.S. equities have come under pressure. Global equities have come under pressure. And so self-directed investors, because the ones that have their money being managed, this is happening for them on their behalf anyways, realize that they need to redistribute, to reallocate parts of their portfolio to address the possible scenarios that could unfold because of this and protect themselves and protect their hard-earned dollars. And so they're going to look at safe haven assets. Now, it used to be that really the two top, the kind of the gold standard, and I didn't mean that as a pun. I kind of do, because it used to be the dollar and gold, not so much the dollar anymore. But gold has always been the gold standard. And the amazing thing about gold, and I've said this at multiple lectures I've given, and I've said this over the last 30 years of speaking, is that gold doesn't change in value or price. The beauty about gold as a safe haven asset is that it has proven year after year, decade after decade, in some degree, century after century, to have relatively stable buying power. So when you think about what these two mediums had in terms of buying power, gold has held up exceptionally well, whereas fiat currencies are doing well. You know what they're doing. There is no real buying power over time with stability. And so that has been the earmark of what gold does in terms of just seeing it as a viable tool to barter and buy goods and services with is the fact that it's had a very strong buying power that stayed relatively close over long periods of time. Whereas with fiat currencies, obviously, the one thing that is a absolute truth is the dollar will buy you less this year than it did last year. It'll buy you a lot less than it did 10 years ago. You can keep going back and you'll never have a time where the dollar bought more this year than it did historically speaking. And we all know why that is. It's fiat. The definition of fiat is, yes, it is backed by the faith of the government that produces it. And they are true to their word in that if you have currency, US currency, euro dollars, any of the, call it the big five, the big three, whatever it is, you can transact business and it has value, and that value has maintained itself, although it buys you less and less over time, but it's still widely accepted as a form of payment to eat, to live, to do these other things. And that, to me, that's the key. That's what you want to take away from your understanding of what benefits gold has, because if you extrapolate from that basic concept, you can draw a really easy inference, and that is gold will always have value, intrinsic value. That intrinsic value won't change that much, but compared to a piece of paper that's an IOU, there is no exception. There is no instance where I've seen currencies begin to outperform a precious metal or a real asset. And I don't see how that could change unless a country was able to go on the gold standard, which is impossible, so a modified gold standard. And even that would have challenges, because who can afford to back their currencies with a hard asset that's would take billions upon billions of dollars, but not fiat dollars, but billions and billions. It's difficult, if at all possible, to do. And until that happens, gold will also always be the premium method of storing wealth or a safe haven asset.
In the interview, Gary Wagner discusses the geopolitical uncertainties and economic policies under Trump that have significantly impacted gold. He notes that while some of Trump's actions are warranted, his unpredictable leadership adds to market uncertainty, benefiting gold prices. The underlying reason for gold's all-time high is a general uncertainty about economic outlooks, causing many people to fear for their money and seek crisis-proof investments. Gold retains its value regardless of inflation levels, remains secure during currency reforms, and is immune to exchange rate fluctuations. One common reason central banks buy gold is to hedge against the risk of financial sanctions, something particularly relevant for emerging economies. These countries worry about being disproportionately affected by disruptions in global trade or getting caught in conflicts between major economic powers. Goldman Sachs research has reported that gold purchases in these nations have increased significantly since Western nations imposed sanctions on Russia in the wake of Moscow's full-scale invasion of Ukraine. Regarding tariffs, Wagner emphasizes that their imposition on various nations could drive inflation higher, ultimately leading to a global economic slowdown. He predicts rising costs and inflationary pressures will further strengthen gold's appeal. Let's get back to the interview.
We still have the geopolitical conflicts, Ukraine, Russia, as well as the Middle East. Those are absolutely unresolved. We have the issues that we have had prior to January 20th. And that was kind of the turning point also, because we had a new administration, not new, he's done this before. So we had some idea of what to expect, but President Trump has done a lot for us gold bugs. In that way, he has been our friend. And so a lot of it has to do with kind of the intrinsic uncertainty factor that he brings, while many of the steps that he's taken are not only warranted, but I believe will lead to some good, others not so much. The bottom line is he's not only controversial, he does things because he believes that they'll serve his end goals, but at the same time, they are serving the precious metals market, specifically gold. So I can't fault someone who's set up a series of administrative and executive orders that has moved gold phenomenally higher. I've been doing this for a while. I remember to the day what it was like in 2009 and 10, that run up to the middle of 2011 when we touched $1,900 an hour. My God. Truth be told, at 1900, I was sure it was going to 2000, doubled down on my positions and kind of got hurt. But that's the reality of a trader. That's how we learn these things. On this particular run, I have been fortunate enough that I could even try something a little bit more aggressive and get away with it because gold continues to run. So right now, what we're dealing with is the real and genuine concern, and this is not out of my mouth, but I definitely agree with this, that these tariffs could bring, most importantly, they're really going to affect dramatically pricing not only for what Americans pay and Canadians pay, but for what global citizens pay. Because from what he says, and the one thing that we've learned about Trump is he typically moves forward with the ideas that he presents. He's saying he wants to include the European Union. What I find most interesting is that he doesn't differentiate between allies and those that we might be politically on the other side of the fence, like Russia or China. He taxes them all. Okay. He has no prejudice in terms of who he wants to impose these tariffs on. And so the fact of the matter is, we're supposed to word it, it could lead to higher prices and therefore genuinely result in an uptick in inflation. I'm going to step out by saying, in my opinion, first, of course there's going to be higher prices, and that those prices will lead to dramatically higher inflation over time, depending on how long he continues with this program of taxing imported goods into the U.S., because the countries he is imposing this levy tax on are reciprocally doing the same back. So whether you're living in Europe or in the United States or in Canada or in Mexico, there's in fact not that many places that are sheltered from the basic fallout that could happen from this, but it most likely will do two things. Higher prices will lead to inflation, and that will cause a huge contraction in the global economy.
Unlike currencies that risk debasement due to unpredictable monetary policies, gold consistently retains its purchasing power through various economic cycles and geopolitical upheavals. This precious metal offers investors a tangible, portable store of value that has proven resilient to centuries of economic turbulence. As inflation accelerates and economic instability deepens, will gold continue its upward trajectory, or are we approaching a temporary peak before the next major correction? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.